Good morning. A minute got away from me there. I didn't realize it was 10:01, so going to be a kind of a short show today because I have a meeting at 11 o'clock. But anyway, we can dive right into it. Welcome back to the Wednesday show. Today is 4/20/2022, and let's see. News breaking: existing home sales down 15%. The market's been acting kind of weird. It was today's an interesting session because last night Netflix came out with their earnings, and apparently they lost 200,000 subscribers, and they warned about next quarter. And the stock's absolutely getting decimated. It's down like 20 to 25%, right? Netflix, one of the Fang stocks. And so, but the strangest thing about that is, and we can take a look at that real quick just to see where it is right now. Let's see. Oh my goodness, down 36%. Wow, I wasn't even paying attention to it. So I guess it was down around 25% at the open. Yeah, that's wow. So, Netflix obviously was one of the original Fang stocks, and out of the Fang stocks, Facebook or Meta or whatever is well off the highs. They were the first ones well, they cracked a while back, but I mean, look at this. Um, Netflix, that gap was the last time that they came out with earnings, and it hasn't really recovered. To be honest with you, it had a real small dead cat bounce about a couple weeks later, and then but it's never really spent a lot of time recovering that, other than just a few days there. But look at this. This is But what I was saying before about the strange thing about today's session is that overnight they ran the futures up. Like as soon as Netflix came out with their earnings, right? The NQ Nasdaq futures tanked and kind of bobbled around, and then I guess after the European session opened, they ran the Nasdaq up to, or the NQ futures anyway, up to like, higher highs than yesterday. It exceeded the highs from yesterday and well above, the Netflix release. But anyway, long story short, as soon as the market opened today, it's just been going sort of straight down, right? It just pretty amazing. Um, just pretty amazing price action, because it was just odd that there was so much overnight buying. I think they're replaying something on CNBC, talking to Reed Hastings, the CEO of Netflix. So I don't know. I mean, I don't know what to make of the whole Netflix thing, but yesterday was a huge up day for the market, and it kind of really put apparently, according to today's open, it really kind of put a damper on the rally. Interesting thing about the Qs here is that the Qs have been, the Nasdaq 100 has been a lot weaker than the overall market, I would say, and you can see that blue line's the 200-day moving average. So they ran it up to the 200, and then it kind of failed, and then lately, on all the indexes, we've been getting this really odd price action, like big down day, big up day, big down day, really nice little pivot low right there, and then a big up day. And so we're kind of trapped in this range here, and it looks like today, we're working on giving back at least half of yesterday's gain. It's only 30 minutes into the session. So the the S&P too, go to SPY. I like the SPY because it shows the actual cash session, reflects it better as far as the opens go. But anyway, yeah, same sort of thing here. Down, up, and SPY straddling the 200-day moving average. And I mean, quite frankly, let me go to SPX here. They have a little bit different look to them. Yeah, look at the SPX, right? Like today's high is not over the 200-day moving average. And then, of course, I hate to do this live because it's always kind of a hassle, but I'm gonna try it anyway. Yeah, I'm gonna draw a trend line across those highs, see how it looks. Yeah, so um, really close to that downward sloping trend line there, and not that means all that much, but it does kind of, because that's a really nice. It's kind of a nice pattern, little falling channel like that, and typically typically you break over something like that and you get a move higher. So I think everybody's probably watching that. Obviously, everyone's watching the 200-day moving average. The 200 days kind of, it's just barely sloping up. It's practically going sideways. And so, if you think about it, I was looking at this the other day, you know, below, close below the 200-day moving average, then above it, and then below it, and then above it, below it. And so the market has been chopping above and below the 200-day moving average. There's not much of a slope to it, so it's really not that useful at this point. I mean, typically, you can look at a 200-day moving average like back over here, and at some point when the market, gets well above it, and of course you had the 50-day cross up above the 200-day, but using the 200-day moving average is as a guide is one of the first things that most technical analysis books or whatever talk about. I guess it's been a long time since I read one, but anyway, you can see over here, the slope of the 200-day was kind of significant. Obviously, the market was extended well above it, but there was a huge, long period of time where it was above it. And so now what you got is just a bunch of vacillation above and below it, and it's starting to flatten out. And so it's not really that useful as a guide until the slope changes. So, and I suppose until the market like really sort of pulls away one way and the slope changes. It's interesting that the 200-day got broken to the downside, but it was still kind of sloping up because obviously it's a extremely long lagging indicator. But anyway, I had some trend lines drawn. I had a trend line. I still do somewhere in my list over here, but trend line drawn across that high and these highs, which got broken here, and that was sort of a near-term positive for this rally. And then of course, the rally, it was kind of like a little fake out sort of in a way, because it broke right above this resistance here at say 4600. That was, draw a horizontal line there at 4600, and it poked above it and then failed. And it's looking a little bit suspect right now. Really, really noisy, choppy pattern. Not really trending. um, So, there's not a whole lot to glean off of it. And here's the thing, we're headed right smack into the thick of earnings season. Like earnings season starts, is gearing up big time right now. So, quick look at the Russell 2000. It's looking a little precarious here. If anything, this looks kind of like a little sort of a bear flag type channel, right? Draw a trend line across the lows and highs, and if it breaks down, look out. But you can see that, it's trying to hold up here. Over under on Russell B200. We just looked at the Qs. Yeah, Qs are looking a little weird. Quite frankly, this pullback and this little consolidation here, if we do get some good earnings from Tesla and Microsoft and all that, if they have, Apple, if they have positive earnings reactions, then it's possible that we could see a snapback on the Nasdaq. The other thing I've been noticing is that the energy stocks and the technology stocks are kind of like in opposite land now. Let's see if some of the energy stocks that I follow, they got hit yesterday, and meanwhile the technology stocks had a big up day yesterday, up until Netflix threw cold water on that. So anyway, kind of interesting. Let's see. Real quick, yeah, I need to make this kind of a quick show. Real quick, we got a couple of a couple of new pending stocks on the list here. So let's take a quick look at those. This one is BLDR. This came on the list a couple days ago. Pretty nice little pattern here as far as it's a pretty nice little pattern, and I guess what we're looking for here. Well, first thing we're looking for is a close above this area, above this line, and then a rally back up to it's still kind of in a longer term. Well, I won't say longer term, but it's kind of in, yeah, I suppose, I guess longer term uptrend, shorter term downtrend. But it looks like, it has some decent potential for a pretty good snapback rally there. So I'll tell you, there's been a handful of like really good setups that I had to eliminate because they're coming out with earnings like, any day now. And so this particular one's not coming out with earnings for a few weeks. And let's see, there was one. Well, here's one. Let's look at it. RHI. Yeah, this was a beauty setup, and it would probably be triggering in like literally it would be getting ready to trigger in. But earnings on RHI, let me see when they are. Look over here on my fingers. 426. 426. So I mean, hey, you're gonna see some stocks that have pre-earnings run-ups, and this is kind of a really nice setup, to be honest with you. Pull back to the 200-day, and a lot of support like down around the low from a couple of days ago. And so, I'd kind of, and hey, this thing could run up to at least halfway into this last little pullback here. But that was a beauty of a setup. And when I looked at the earnings and the calendar, I was like, yeah, just not enough time, right? And especially since a stock like this has to meet a certain threshold to trigger in, and even though it would be triggering in, we might get a little bit more. Not enough time for a proper swing trade to play out, because ideally, you'll see this thing rally up over 120, but the earnings are probably going to determine that. I mean, it's possible that it could run like this, but you get those, you can get, a whole week's worth of days where the price action is just sort of covering itself up. So anyway, that's one that I had to eliminate, and I thought it looked pretty good. Let's see, there was had a couple more too, and then we'll get no, it wasn't that one. Let's see. Let me look down my list. Like I have a little watch list over on the right here. Maybe was it this one? No, that wasn't it. When I go down this watch list, I have to. Well, anyways, I'm not really sure exactly. Oh, maybe it was Rambus. Yeah, I think it was Rambus. So this is another one that I had to delete off of the potential pending list. This is actually, whoops, what in the world did I just do there? This is actually a kind of a beauty here. Longer term uptrend, right? Sort of ups and downs, but this last sell-off here and this consolidation and sold off right to the 200-day moving average. That's kind of nice, and caught some support there. Now it's starting to move. Let me see when Rambus's earnings are. 5.2. So that's cutting it awful close. Now, I mean, it could potentially be traded. This could potentially be traded as a swing trade, off of these lows here for an earnings run up, but or even a little bounce. But here's the thing: is this is a technology semi stock, and the semiconductors have been Semiconductors have been really sort of acting rough. Now they kind of look like they're semiconductors in general kind of setting up for a little bit of a bounce, but let me pull that down. Yeah, added volume to some of these charts and skewed everything. But anyway, this is, semiconductors. AMD actually is pretty amazing because, this is this has been one of the darlings, and this thing's done amazingly well and looking kind of rough here. A lot of lower highs, some lower lows here, and given back. It's given back a lot of the gains since last year. So, but anyway, some of these semis, within the past couple of days, I'm seeing tons of pivot lows on the charts, and so there's some potential here. Over $100, this could make for a decent quick trade here, but of course it is, it's below the 50 and the 200, and there's just no telling. I mean, a lot of the news is kind of been bad for semiconductors, going forward. Nvidia, another one of the darlings, finding a bunch of support right here. Look at the past couple of weeks here. You got this real sort of tight consolidation here. Look a little rough today, but it's going to be interesting to see. I haven't looked to see when Nvidia's earnings or whether they've had them already. They might have, but I think they were one of the first to release. But anyway, I got a little bit off track there. Real quick, let's look at the other pending trade here. Let me find it on my list here. Here we go. Be better to. My chart keeps like getting all funky because I got the volume on some of these. Look at this. This is a beauty too. It's got the same sort of. I don't particularly like these rounding top pullbacks as much as I'd like to see, like sort of something. Well, I guess this one wasn't as round back here. Like the top part of it was more, it went up and then it kind of went down at an angle, but it'll top you over here. But you can see it pulled back and then started recovering. And so this is another one that, before today, but actually before yesterday and today, had a pretty darn good look to it. But anyway, we'll see what happens with this. This is pretty volatile stock. I believe if you look in on the pending list, you'll see that it's got around a 5% average daily range, which is fairly significant. But it is a decent potential. And let's see, there theoretically should be enough time here. 5:11. It says 5:11 before the market opens or when the earnings come out. So I had to remove several of them from the list. And so I figured, well, that's a few weeks, and so maybe we'll get some sort of a earnings run up on this. So there's so many really busted chart patterns out there, but it's got a pretty good look to it. And then, of course, we have the open trade here, which the sucker's has been kind of all over the map. Originally, when it triggered in, it was making a nice run, and then, of course, the market itself had a little bit of a setback, and so. But this is just a really nice pattern here. Let me see what I can do here. All right, so let me extend that out. And just for the fun of it, oh, I didn't even mean to do that. I meant to do this. I want to draw like this little, there you go. Yeah, close enough, right? But yeah, that's, I talked about like sort of a cup and handle pattern on this. And so, so far so good. Originally, I thought the earnings on this would be coming out, around now, but the good news is that earnings are not coming out for a while here. So, all right, so let me do that. And I kind of miss kind of missed my old free stock charts because they allowed me to mark things up in real time way faster and easier and with less fooling around here. Like every time I do something with these particular charts, something on the screen gets skewed. But anyway, that's a beauty of a pattern right there. So looking pretty good on this. I guess you could call that sort of a cup and handle. You had like the little W pattern that I always talk about here, which is perfect. Um, you can see right there at about 52.50 is where it broke above the W pattern. Um, and so, the past few weeks on this have just been sort of a consolidation, and you can see that theoretically it's starting to emerge here. And so, with the earnings, well, 427, that basically gives us, let's see, that basically gives us another week. So the earnings will be coming out next Wednesday after the bell. So we got one more week for this thing to make its little sort of pre-earnings move, and not extremely volatile, and so which may be good, but not extremely volatile, and so we'll just have to see how this works out. And of course, the market itself is in sort of an interesting spot, and a lot of what's going on right now has to do with what sector a stock is in. So, and of course, everybody knows that what we're watching here is the bond market, right? Everyone's watching the. I like to pull this one up just because it's quick and easy ETF to figure out what bonds are doing. But basically, what this is this is the price of bonds, and the inverse of this, the TBT, this is bond yields. And so we've had a tremendous run up, as I'm sure you're aware, in bond yields, and there's a lot of people saying that that's going to cause big problems. But the thing of it is, it's happened so fast that it's happened so fast that bonds are actually probably due for a rally. And I don't even have time to get into the implications of the rate of change that we've seen in yields. And so, but it's a mess. I was somehow or other, I should have saved the symbol, but let's look at, here we go, the BND. That's a good Vanguard Total Bond Market ETF is a pretty good one to look at to just get an idea. But somewhere or other, I stumbled across municipal bond ETFs, and I mean they look like this basically. So muni bonds have just gotten whacked, and you never really hear much about muni bonds. But the thing of it is, I've read that that this recent sell-off in the bond market has been like one of the worst ever. Like yields have risen faster than any previous time, because it's happened very fast. And so the thing about this is that it had a minimal yield up here, and then as interest rates have gone up, then this is tanked. And so the problem with this is that people give up. You can lose years worth of interest in some of these things. It's like, yeah, back in the day, I used to talk about, you know, stocks that, yielded a few percent or whatever, and then you could give up a year's worth of dividends in a very short amount of time if your stock tanks. So you're seeing a lot of this. I mean, destruction in the bond markets everywhere. And generally speaking, when bonds sell off significantly like this, it pays to be cautious. So stocks have been kind of ignoring the rise in bond yields thus far, but it's all going to depend on how earnings season plays out. And quite frankly, I'm surprised. I'm honestly surprised. Let's see. There's four Fang stocks, right? And so here's Facebook. which I'm just always probably going to call this, just like I still call Google Alphabet Google. I'll probably always call Meta Facebook. But this was the first one to crack, and then you got Netflix, and so um, I think Microsoft is. I think Microsoft is, well, Microsoft's down quite a bit too. And so, let's see, Apple had a big rebound all the way back towards the high. That's probably, I'm going to say that's probably why the market looks like it's not down that much. Interestingly enough, I don't really look at Google that much, but didn't I'm pretty sure they announced like what, a 10 for 1 split. I don't know when that's effective, but they announced 10 for 1 split. Google's not that far off of the lows. So it's just odd because I know that those stocks make up a big part of the indexes. Real quick, let's see. Still got a couple of minutes here, but not much. Financials looking really super choppy here. So really super choppy. Lots of zigs and zags, and it looks like potentially a little bit of a rally is getting ready to start here. Let's take a look at the industrials real quick. Industrials, another this the industrials sort of remind me of the Russell, the way that it's in a big choppy range for a year basically. I mean, if you go back to this time, in 2021, as of a couple days ago, it was basically, right around $100, and so that's a big choppy range there. We already looked at, I guess SMH is the semiconductors. Yeah, semiconductors, just coming off of retesting those lows. So XOP energy, the energy's been like sort of the big winner, obviously, energy and materials, right? And so, if we got a reasonable pullback in that sector, then we probably get some energy stocks that would set up, but we have to get a pullback first, in order to set up, because we're let's see, XME, metals and mining, same sort of thing here. We haven't really, this last pullback, this pullback was kind of quick and not really that deep, and reversed right away, and same here. So we haven't seen any sort of reasonable pullback, but these strong sectors here are probably the ones that are probably going to be the ones that set up for some decent swing trades. So anyway, we got one open trade, two pending trades. As earnings start to come out and go by, then I think we should probably get some more going. So the biggest thing is that anything that's set up in a decent swing trade pattern has to, I mean, I would say a minimum of 2 weeks of trading in order to be worth fooling with, right? So that's kind of where we're headed. But anyway, with the market so choppy, there's just no telling, which way this thing's going to break. So we'll just have to see. Anyway, lots of news coming out that affects the markets, and so it'll be interesting to see how this sort of. I mean, we have perfect pivot low a couple of days ago in this rally, and as you saw, that trend line that I drew that disappeared now got broken, and so it's going to be really interesting to see which direction it takes from here. But anyway, I will be back next Wednesday, and we'll get into a little bit more lengthy discussion. So I wrap it up early today. Thanks for tuning in. I will see you here next week.